Hello students, today we are going to see the topic journals. Under journal, we are firstly going to see the meaning, definition, specimens, that is format of a journals with the relied example for the journal entries. So let us begin with the meaning. Meaning. The word journal is derived from the French word jour. Jour means a day. Therefore, journals means nothing but a daily record. A journal contains a daily record of a business transactions and hence has been named so. As soon as these transactions take place, it debit and credit aspects are analyzed first and the recording are done on a chronological order. Chronological order means not alphabetically, but accordingly the date the transaction take place. So journal is a book of original entry because we are going to record the first transaction, and it is also called as a book of prime entry. Now let us see the definition of journals. So definition given according to L.C. Cooper, a journal is a book employed to classify, to sort out the transactions in a form of a convenient for the subsequent entry in the ledger. So ledger is the secondary book. So first primary entry is done in the journals, then we go with the ledger. The second definition is given by the Dictionary of Accountant written by Eric Kohler. So according to Sir, a journal is a book of an original entry and recorded transactions not provided for a specified journals. Now let us see. Go to the next slide. Then here we can see the specific format. We can say a specimens of a journal. So according to this format, we are going to write on the first line journals of Messrs. XYZ, Messrs. ABC. Then in the first column, we are going to record the date. A specified format is there to record a date. First, we are going to record the year, then month, and then the specific date of that particular transaction. Here in the second column, we record the particulars, how the transaction, how the two aspects are identified, and accordingly one transaction is debited and it is denoted by DR, and the second transaction, credit transaction, we are going to denote by 2. Here we are going to write the name of the account, that is account debited and to account credited. Then these transactions where we can get a brief explanation. Right after this transaction entry, we write a brief explanation of particular entry, that is narration. Here we open the bracket, start the narration with being, and after writing the specified explanation of that particular entry, right after the entry, we close the bracket. After that, the next column is LF. LF means ledger folio. Ledger folio means a page number where we denote where we are going to record this particular transaction entry. Then there is a debit amount rupees and credit amount rupees. So subsequently debit entries amount will be recorded under debit amount rupees and credit entry will be recorded under credit amount. So this is how the specific format we are going to record our business transactions in a chronological order. Now let us see the types of journal. There are two types of journal. First one is the simple journal entries and the second one is compound, or we can say combined journal entry. Under simple journal entry, where every debit transaction or every debit entry has a corresponding similar credit entry. So where we can see one entry is debited, with that same amount we are going to credit the another transaction. And whereas a compound, or we can say combined journal entry, where one effect will be for a debit transaction and correspondingly credit transaction will have 2 or more entries. It can be vice versa also. So this thing I can explain well with the example. So let us go with the next slide. So this is an example where we can first see the journal entry to record a simple transaction or a simple journal entry, we can say. So the example is purchase goods for cash from Sonu worth rupees 2000. So this is my entry. So firstly I have to recognize two accounts. So purchase account is one account and another account is cash account. Okay. So purchase belongs to a nominal account, and nominal account rule says debit all expenses and losses and credit all income and gains. Whereas cash account says cash account is a real account. So debit what comes in and credit what goes out is the rule we are going to apply for this. So accordingly, the purchase, obviously it's an expense, so we are going to debit the purchase account, and cash goes out when we do any sort of purchase, so we are going to credit cash account. So our entry will be, we have to specify the year, month and date in the date column. Then we have to write the entry purchase account debit to cash account. With that we are going to show specified narration. So the narration is being purchase of goods for cash. In front of debit we are going to record the amount of rupees 2000, and in front of credit we are going to record the amount of rupees 2000. So this is how we are going to record the simple business transactions. Now let us begin, or we can see a combined entry. A combined entry where we are having one debit entry and correspondingly 2 to 3 credit entry, or 2 to 3 debit entry and 1 credit entry. So first let us see the example. Example is purchase laptop from Jalaram and Company worth rupees 50,000 at 18% GST, and amount is paid by check. So obviously the two accounts, first we have to recognize, one is a laptop and another is check. Check means a bank transaction. Okay, here when we are purchasing the laptop, along with that we have to pay 18% GST. So this 18% GST will be break into two, that will go 9% to CGST and 9% it will go to SGST. So first we will see how we are going to calculate the net value. So the cost of your laptop, that is 50,000, and the break off of the 18% GST, that is 9% CGST and 9% SGST. So 50,000 multiplied by 9 divided by 100 will get you 4,500. Again you are going to do the same thing for SGST and you are going to get 4,500. So addition of 50,000 plus 4,500 plus 4,500, the net value will come to 59,000. So now you are going to record this particular combined entry or compound entry in our specific journal format. So firstly you are going to record the year, month and date. Then when you are going to purchase a laptop, it's a real account, so debit what comes in and you are going to pay with the help of checks. So bank is the giver. Accordingly, laptop account will be debited, and along with the laptop, 2 GST, that is the input GST, CGST and input SGST will be debited. So your entry will be laptop account debit, and the original cost of laptop will be shown, that is 50,000, whereas input CGST account debit 4,500, which we have calculated over here. Then input SGST account debit 4,500, which is calculated over here. Then a combined entry of laptop, that is we are going to show the credit entry against bank to bank account 59,000. So our narration would be being purchased laptop by check at 18% GST. So this is how we are going to record the combined or compound entry. So that's all from my side. Thank you.